Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Busy day today. Of course, we're going to talk about those earnings from Beyond Meat, the fireworks in that yesterday, and I guess today. We'll see that. We have a lot of other earnings to discuss as well. Under Armour, Celgene, to name a few, but we'll get to as many of those as we can. We also have the Capital One data breach disclosed yesterday, so we'll talk about trading in that, the wild day in Exact Sciences, and we have two guests joining our show today. First up, Nick Shaheen at 8:35, and then at 9, we'll be joined by a new guest, someone you may have heard of, Guy Gentile. He's an investor, he's a trader, he's an entrepreneur, he's an all-around Wall Street character. He's going to tell us about his Beyond Meat trade yesterday. That'll be at 9 o'clock. So Guy Gentile at 9, Nick Shaheen at 8:35. Joel Elconin is on with us now, though. Joel, what's the word here overnight?
Got some red on the screen here, Spencer. Down 13.25 handles. Everyone's looking for an excuse or why is the market down? Well, the reason the market is down is we put in a triple top. How do you like that for after the fact? Friday's high, 29.50. Thursday's high, 27.75. Monday's high, 27.25. Your pre-market high, 27.5. So there is your major wall. We hit resistance. Buyers turn sellers here. Pre-market low, 07. Just hanging out here near Friday's low. So see if we can get a bounce on that. Mid-range on the session comes in at 17.25. Crude in the green by 35 cents at 57.23. Gold up 7.80 at 14.41.20. Silver in red or in the green by 4.5 cents at 16.48.5. Bitcoin just hanging out here, up $180 at 9,720. Let's bring in Triple D. Did you get any of the carnage in the markets early this morning, or I guess it was early this morning?
Not really, no. It's actually market was trading up last night after hours, so I came in this morning. We were leaking here overnight, and then we seriously started leaking here. We've been leaking really, ever since 4 o'clock. I don't know what's going on in these China negotiations, but the Trump Twitter account seems to say that they're not going that well.
Oh, what about Lombardo 141 here is asking it because of the Fed? And this is total speculation here, but what if the Fed pulls the rug out from the market and says, no rate cut?
Sure. They're going to go 50. Now we're down $1.30 here. They're going 50.
They got to go 3.
If they go down, if the S&Ps fall, like if the Dow's down like 200 today, they're going 50 for sure. They're market dependent, not data dependent. We'll keep saying it on this show. This pullback here is helping the Fed's case for cutting rates by 50.
If they do it by the S&Ps.
It's not an economic show here. It's a trading show. Let's move away from talking the general economy, interest rates. I don't care about a China deal. I care about the S&Ps being down 13 points. I care about all these earnings stocks. I care about Beyond Meat. Let's talk Beyond Meat. Let's start with the gun. Maybe this is the catalyst. Spinner saying this is the catalyst for the market sell-off. Everybody selling Beyond Meat, and then they started selling everything off. I'm not sure what that. But BYND, it was a joke. But BYND down 28 points here. The earnings report came out and was wishy-washy. It chopped around a little bit. But then the fireworks started on the downside when they announced a secondary offering. And that was basically a lot of insiders saying, we want the hell out.
Yep. So I'll give you the numbers here. Again, they don't really matter as much as that offering does now. But the Q2 EPS, they lost 24 cents per share. I don't know how much that compares to an 8-cent loss estimate there. Their sales beat. That's what you want to see. $67.25 million versus a $52.7 million estimate. They also raised their sales guidance for the year. It was $210 million. Now it's $240 million. Ooh. So they're selling some burgers, but then that offering came out. They said they're going to be, let me get the headline here, offering 3.25 million shares 3 million other shares coming from selling shareholders, 250,000 coming from the company. They have not yet announced a price, but that's the offering, and the float's what, 11 million total. So that's what happened.
We'll offer a few shares, get a little more liquidity out there. They'll offer their shares because they know their company isn't worth $13 billion. That's what I'll say. They're like ringing the register is what they're doing there. And obviously they still own a lot of shares, but that, in my opinion, that's what this is. This is called register ringing, and irrational exuberance doesn't last forever. So they're using this opportunity to try to get out of some of their stock. It reminds me of GoPro. Reminds me of GoPro.
Oh, I thought about that.
Yeah, back when it was $90 and you had that secondary right up at the top. And that was the high, 98. It's $5 here now. Not saying beyond belief chart is going to go exactly like GoPro. It could chop around here, but this is not good news for the long-term thesis. Not good news at all. The one thing going for them, it's still hard to borrow. It's still got the short interest going. So it could still not be over here. Long-term, though, I still hate this stock at this price. Long-term.
And the thing about was it Go? Yeah, it was GoPro. Was they let the a primary shareholder out of like a covenant where he couldn't sell stock, and JP Morgan let him out of that covenant something, and so he was able to sell stock. And when that was when it was 80s and 90s. I still don't get that, why they were allowed to do that. But cashed out, I mean, Beyond Meat, let's see how it trades today. I will say, if you took a risk and you paid $11 for the 200 put, you got to wait because you're still
you're still not making money.
Right. Exactly.
Hard to make money buying options. I will say it again. Had a friend talking to me yesterday ahead of the print saying, I just got to buy puts in this. I was like, we went through this exercise in the pre-market show, and we had 200 puts that we priced out, the long-term ones. He's like, because it was like, I'm going to go long-term because, you know, long-term it's going down. Well, like, yeah, but a lot of other people are speculating the same thing because the 200 puts were going for $80. $80, $120 to break even on those. The thing had to fall by 50% for you to break even. It could possibly do that, and I think it might do that. But holy cow, you're looking at it showing the stock, which I guess is impossible to do because you can't get the borrow. So I guess that's why the option premiums are just jacked. But here, you get the direction right. If you're buying the short-term puts, like Joel is saying, buy the 200 for $10. It falls 28 points, and you're still not making money. I mean, yes, you'll be able to sell an option because it's going your direction. It'll probably be a little more, than the intrinsic value. But intrinsically, it's only 6 points in the money here right now. Very difficult game to make money buying options on crazy stocks.
And boy, look how quiet it is now, Dennis. You made the pre-market low, after hours low. Let's call that 191.11, and you kind of kiss that area 191.20. So there you go. There's your support. On the dailies, what do I got there? Oh, there's a daily low at 191.78. So that's a good level. So there you go, 191. Below that, what's your next daily low? Your next daily low doesn't come into 177.76, but I don't know. Low will probably be somewhere in between there. I have no idea.
It could go anywhere.
Yep.
You could see more squeezing. I mean, you still have that issue too. So just because this is all, and the report was, I guess, okay. And they also talked that the Duncan and the Tim Hortons aren't in this, report yet. So, that's going to help going forward to those contracts, and they're probably going to get more contracts. So I'm not saying to come out here and the story is over and, this is it. It's just very difficult to trade. And I don't know where it's going from here. All I'm saying is long term. I think when you look at this a year from now or 2 years from now, it might look like the GoPro chart. So if I was an investor, I would not be sticking this in my long-term portfolio, but you can trade anything. And I'm definitely not shorting it because this thing is too wild for my risk adverse tolerance.
And we are going to talk about this again at 9 with Guy Gentile to see how he traded this yesterday. So don't forget about that. Do we say all we need to say about Beyond Meat?
I think so. We have 160 stocks reporting here today. some big names. We have a data breach, another one, which is probably the story of the day as stocks trading down 4.5%. We're going to get to that in a second. But let's stay on the earnings parade here. We had one other big one, I would say, last night reported right at 8 o'clock, and that was NXP Semiconductors. Do you got those numbers?
I always have the numbers for you, Dennis.
I
NXPI
love numbers.
reported. Oh, and I just lost them on my screen. So I had them and then I lost them.
And you're lying to me.
Give me what you're right. I was lying to you. Give me 1 second here. There we go. $1.91 on the EPS versus a $1.78 estimate. Sales of 2.217 versus $2.2 billion. So a beat and a beat for NXPI yesterday.
Guidance or something was bad that when I saw those numbers go through last night. I'm trying to remember because I didn't write them down. But there was something that was light. And I think there might have been an adjustment too. So the adjusted number might have been weaker too. Anyways, this thing got rocked here this morning. Buy the dipper's already lurking here though. Spencer or Joel, how low did we get? Because I saw this thing print a lot lower.
It did print a lot lower. It printed down to 93.80.
$94. So this thing lost 10 points. I'm telling you, there's some money buying these stocks and the ones that are in uptrends, the ones that have been coming back on these major earnings dips, because it seems like the algos just dip them down too much. And here it is. It's all the way back up. So if you're buying there 93.5 or 94 or 95 or 96, congratulations. You're already way up in this because this thing's not even down much at all now.
Down 223. I mean, that low is quite a ways away now, but we'll just look for some corresponding levels to trade for today. Yesterday's low 202.18, so right back up there. Yesterday's close is a bit above that at 104.23, so I'll call 103. That'd be my area of resistance. You split a little bit of split those two numbers there. On the downside, if you'd start to go into reverse again, I'm sure I don't think you'll get down to that 93 or 94.80. I do see a pair of lows at 99. This is back from the 22nd and the 23rd.
Then this morning, we just have a ton of reports. Spencer's crying about this one a little bit. It's Under Armour. I think he owns it in his long-term portfolio. Give us the details here, Spencer, and what are you doing with your position?
I'm not doing anything, but this is one I bought this like 13 months ago or something, and just for fun. And
it looks like you made a lot of money. That was a pretty good buy 13 months ago.
Not anymore, I didn't. So anyway,
you watch the thing go up for the last year and give it all back in a day.
more or less.
Investing fun. So long-term buy and hold fun.
The Q2 EPS, they lost 4 cents, up from a 21-cent loss a year ago. Sales missed by a hair, 1.19 versus 1.21 billion dollars. They guided fiscal year EPS at a range of 34 to 44 cents. And that's pretty much light across the board. You're seeing it in the chart there this morning. I'm not doing anything, but what can you do? What can you do? I don't know.
Well, some people are selling here this morning because it's down 11% here in the pre-market. UA, UAA, you can pick your poison. They both trade very actively. I don't know. Find us some support levels. UA $20, Joel.
I'll just go with the pre-market lows right now because it's
sure.
Move and 2110 in UA is your pre-market low. You hit that on 3 different occasions on a rally. Look at 22. 22 was an area of several lows in July, so you get above 22, a chance to rally. Keeping an eye on the pre-market low. Vacuum area, though, between 20 and 22, that's for the UA, the UAA. Similar chart here. Just give you
identical chart. These two seem very closely together. I do the pairs every once in a while on this.
Yeah, and this one, just 3 brackets in a row here at the 23.5, 23.60 area. That's your support here after. I don't know. I mean, you really can't call this like a long-term quality stock here, but you've had a stock that's in a considerable uptrend.
But it's turned. Yeah. So that's the one good thing. The one bad thing, it's a retailer, and there's 2 things that this market does not like. It's traditional retailers, and apparel, everything falls into that category here. And oil stocks. They absolutely hate oil stocks. This market just despises oil stocks. So that's what's not going for it as a retailer. So I'm not buying. I don't want to own retailers. I don't want to own oil stocks. It's pretty much my long-term portfolio.
Not even, who was it this morning? Not even Ralph Lauren this morning?
How's Ralph Lauren doing?
They reported.
Nice. Up
They,
6 bucks.
they reported
Another
Q1
selling opportunity.
EPS beat and a sales beat last quarter. $1.77 versus $1.66 on the EPS. Sales 1.429 versus 1.42 billion, and they see their net sales for the current quarter up 1%. Net sales for the year up 2 to 3%.
Significantly off its 2017 lows of $66, also significantly off its all-time high, which is like on $180. So it's kind of in the middle of really nowhere in the long-term portfolio, or looking at it from a long-term perspective. Short term, I mean, you've got a nice report. It's popping up. I think you got that one level there. Joel might point out on June 24th, we're up to 118.65. But there's some air in both directions here. So I kind of feel like there's no trade here.
Yeah, I look a little bit above that, and I'm looking at the pre-market high you just made on not many shares at 121.74, and lo and behold,
so it's already leaking a bit.
Yeah, and lo and behold, you go to May 13th, and you had sellers at 121.71. That was your daily high, $4 off that. So what you need for you gap buyers on the open, you need this thing to open up. You need to get it into 120 handle. You need to get it into the 122 handle, or else I think this thing will roll over, get back some of these gains. Long way to go down to yesterday's to close the gap. You need to get to 112, but with the way this thing trades, that could happen pretty quickly.
Jump over, and if you got a specific stock you want to talk about, let us know, because there's so many to talk about here this morning with 160 stock. We can't cover them all. Procter Gamble ripping here this morning, new all-time highs. The stock just does not stop going up. PG trading 121.30. I got to go look at the book. Spencer's going to go look at the numbers.
PG reporting this morning Q4 adjusted EPS of $1.10 versus $1.05. Sales 17.1 versus $16.86 billion. So a beat and a beat. The guidance they gave for the fiscal year was good as well. So beat across the board.
This book is littered with offers. So does that hold down the opening print? I think possibly. It's going to open up. There's no doubt it's opening up. It's a good report. It's already traded 263,000 shares, but people are paying 121.20 right now. We have seen these things, just continue, and it's still a lot of time. Going to trade a lot of volume, but I'll just give you, I'll go through the book here. So at 117, this is the New York buck. So this is liquidity, unless these orders cancel, which they're usually on the book to get done. 73,000 shares at 117. There's another 73,000 around 118 with 33,117.96 and another 40,000 at 118. There's another 97,000 at 118.5. So, between that was a 70, 140, 240 there up to 118.50. Then there's a bunch of the 119s, and then the mother load at 120, another 250,000 shares. So you're talking about 500,000 shares to get her above 120. Trade 264,000 shares already, so it can do it. But just keep that in mind that sometimes I can hold down the opening print, give you an opportunity sometimes to buy a stock on the cheap. So we'll see what happens. A lot of time to still trade a lot of volume. So not saying it can't open at 120, 120, but I'd be more thinking it might open around 120.
Oh man, or 120. Because what about all these people that come in and sleeping in? They're gonna come in, they're gonna see
Maybe
that.
they're gonna want to buy it.
You're gonna want to buy it.
I kind of want to short it here, but I haven't made a trade on it. I'm just going to hold on here and just we'll see what happens. I may short it here yet and try to cover at 120, but it's a lot in the book. But the only thing that scared me, it's already traded 265,000 shares, and that's an early pre-market. Volume picks up in the next hour, so this thing could trade hypothetically over 1 million shares by the open, and then it could take out all that stuff. So we're just analyzing, what's it take to take out, the 500,000 up to 120. Well, you got to do a minimum pre-market volume, probably 500,000, because if it's all day traders selling it, they're going to cover on that. That's where I'm getting. And obviously, some of these people aren't going to be, that are buying it aren't actually selling it short aren't going to actually be buying it too. But there's probably a few traders that are banking what I'm talking about. That you sell it short, maybe we could get this thing covered at 120 in the pre-market or at the open. I don't know. It's done a lot of volume, so it's scaring me away a little bit. But 120, it's going to take a lot more volume to get her over 120. That's all I'm saying.
This stock is just going on a hell of a run, hasn't it, Dennis? Holy man,
it's unbelievable. It just keeps going. I mean, PEs, who cares? Trades 28 times or whatever it does. You know, it's consumer. It has no growth. I guess they just, you know that this isn't going away. People are going to use these products, you know, forever, it seems like. So there's no threat from like Amazon coming in, at least no immediate threat, I don't think. So they continue to, you know, and there's, you know, just a hidden buyer, 120, 110. They're just buying everything up. So if somebody goes to sell 120, 110, they buy it. So there's definitely some people pushing this thing up this morning. Can it open over 120 is the question.
Pre-market high 121.61, still holding up here, 121.10. So as we speak, I think Dennis 122, man. I mean, if you see that in the pre-market, I don't know. It'd be hard not to take it on the short side. But
yeah, I just see that 250,000 shares at 120, and it makes me want to take it on the short side here right now. And again, this would just be a short-term trade, like trying to short a pre-market and buy the open. But I'm not sure. You know, I'm not sure it's gonna. I have no position on this yet. I might take a position here yet. I haven't decided. Right now, there's just an aggressive buyer at 121.10, and 268,000 shares already traded. So it's gonna take some volume to get over 120, though. That's what we'll say at the open.
What about this Capital One thing? You want to talk about that?
Yeah, let's talk it.
Talk about COF here. So COF,
Wow.
I don't know where this ranks, but it must be among the largest data breaches for a financial firm or any firm, I guess, in America. So I'll just read directly from the release since I have it up right now. So this was out yesterday. It determined that unauthorized access by an outside individual who obtained certain types of personal information relating to people who had applied for credit card products and Capital One credit card customers from 2005 to 2019. That's me. Let's see. They accessed, among other types of information. Let's see here. I'm reading now from the release. I just had it all up on my screen. A lot of words to read.
It's bad news.
It's bad. Here. Okay. 140,000 social security numbers, 80,000 bank account numbers, although they couldn't say for sure that this data had actually been sold on the black market. Credit scores, payment histories, and credit limits. So a bunch of information from a bunch of Capital One customers, of which I am one.
Are you worried about this? Because you're a Capital One customer?
What good would that do me? What can I do about this? You know what I mean? Like, what good will worry?
Cancel a Capital One account.
Sure, but the information's already out there. So what can I do? Nothing. All I can do is wait 2 years when I, you know, like I did for Equifax, wait 2 years and then apply for my 100. Apply for my 100.
Equifax Part 2.
I don't know.
That's just what I was thinking here. That's exactly what
there's nothing I can do. Yes, I can leave the bank, but one, that's a pain in the butt, and two, the hack already happened, so there's not much.
Good point.
So I don't know.
Good point.
I don't know what I would do. I don't know what good worrying about it would do.
I mean, Equifax was down for a bit. It stayed in the gutter on this, so we have precedence here. It stayed in the gutter for the better part of a couple months after the data breach. Eventually, it went up and started making new highs. So if you're going with that theory, maybe wait a little bit, let the dust settle, let's see how ugly this gets. But eventually, this could be a buying opportunity.
Is it
thoughts, concerns?
With the Equifax though, didn't it like, okay, we had this and oh, we found some more? Wasn't that the story with Equifax? Like that was just the tip of the iceberg.
Well, yeah, off the hop it was.
I don't remember if Equifax self-reported. Capital One self-reported yesterday, which is interesting. And they did say it'll cost the bank approximately $100 to $150 million. That's not bad in damages. But I don't remember if Equifax self-reported their. I think they did. But still,
I think it's going to be a buying opportunity. I don't know if I have the guts to come in here on day one because it came on day one with the Equifax stuff. You were way early. So I'm going to just probably sit back and watch the dust settle on this until I feel like it's safe to maybe think about buying the dip.
So here's what's also interesting is the person that was arrested, whose name is out there, Paige Thompson. The person was arrested in connection with the hack of Capital One here, had accessed it through AWS. She had access. She had worked. She had been an employee at AWS, Amazon Web Services, and another company who's not named yet, and she had accessed these records through the cloud. So that's another wrinkle to this.
89.
I don't know what to say.
$89. I would not put a bid out there before $89 with this thing, because you're going to have some sellers here off the open. You're hanging out near the pre-market low. I said, well, it's even below 89.
Let it digest.
Yeah, 88. No, I'm looking at 88. There was a pair of lows at 88 at the end of July. There was a pair of lows at 88 at the end of June. It's also, you had a gap up. I don't know what that was from, but 88, 87.90 low was low on June 4th. So, I mean, that's where I'd be. That's where I'd be bet. If I was short, I had this much better place to cover a short than to try long. But that 88 is just sticking out to me. That's $4 away. Probably some big old sell stops in this thing too. I mean, they're still in the market. They'll still get. They'll get.
I mean, we could go look at the book too. I don't know if this. It ran the last 6 days, so the book's probably clear. When you see a stock running, it clears out the book, So I don't know. I don't see anything in there. So I don't. To come in on right off the hop, you're really gambling because you don't know all the repercussions here. You don't know if all the information's out there. In the Equifax case, it would have been a mistake to come in right off the hop. It would have worked long term. So I guess if your time horizon's 5 years, maybe it's a different story. But I'm gonna wait till the dust settles.
Jeff's asking what book, and Jeff, when we talk about the book here on this show, Dennis is looking at the New York Stock Exchange order book, where they display orders before the open. Not like the old days, different kind of book, but it's there. It gives you orders, GTC orders, and orders that are placed for the session. And a lot of times, believe it or not, in this day and age, I mean, people put those GTC cancels out, those GTC orders, and say, hey, like that person who wants to sell 70,000 at 120, they've wanted to sell it for a long time. And just because it's up on an earnings report here trading, I don't know, did it back off 120 yet? They're going to keep that order in there. So when he talks about the book, it's the New York Stock Exchange open book.
Keep going through this earnings parade, Spencer. We got Eli Lilly, we got Grubhub, we got ConocoPhillips, we got Merck, Elconin. I mean, we can go anywhere.
I'm going Merck. Merck had a great quarter. They beat on the EPS. They beat on the sales. They came out with some guidance that was higher than estimates for the fiscal year EPS and for the fiscal year sales. Good across the board for Merck.
I still got in the long-term portfolio. It's still one of the biggest positions in my long-term portfolio. I've sold it multiple times. Like I said, I bought this back like 2011, 2012, around $30. And as it's just continued to go up and up and up, it keeps taking, more and more of your portfolio. Like it's going up and taking a bigger percentage of your portfolio. So I lighten it up, trying to stay more balanced. But it's just been a great stock, just a fantastic stock for a long time. If you were really early on Merck, though, and it has been a great stock for everyone, this is going to tell you valuations matter. Go back to the year 2000, Joel, because I can remember Merck, I believe, at $95 a share.
I know. You know what?
What's the all-time high?
I know this. I know this very well, Dennis, because I had the stock back then, and the all-time high was 91.50. And I don't know what it was. That was before 9/11. I think it's one of the times I wigged out. You remember that volatility we had like in March, and January got volatile, January, February, and March. And I dumped that in the higher 80s. Unlike you, I never bought it. So that was, but the all-time high is 91 and change.
And what year was that?
That was in 2000, November of 2000, you hit 91.50.
When you pay PE multiples of 50 for pharmaceutical companies, this is what happens. You held this for 20 years and you still don't have your money back. So when you're paying these crazy multiples, like 100 times sales, which is way more than, the Merck was trading when it was trading 50 times, sometimes in the long run, you can wait a long time to get your money back. So Merck has been a great, fantastic performer in the last 7 years. Still is not back to where it was in the year 2000 when they had to buy everything. That was the bubble of all bubbles. So anyways, it's been a great performer here. The only thing I would say is if you're trading in short term, a little overhead supply coming here, 86 to 87, as obviously we sold out from there a couple weeks ago. You do have some, still some concern there with drug pricing. So you wonder if that doesn't come, up in the media here again, or through it. There's obviously, we've got an election coming, there's going to be talk of that as well. And that scares me a little bit to add to drug stocks here. I've still got this in the long-term portfolio though, so I'm sticking with it.
Wait, there's an election coming?
I'm saying in a year and a half there's going to be.
Oh, okay.
Yeah,
We're not putting our day trading shoes on. We're putting on our little longer term shoes on. And I just think there's going to be a lot of people talking about a lot of different things, and drug pricing is going to be one of them. And if that comes up in the media a lot over the course of the next year, as obviously people are positioning to try to win, first of all, the Democratic race and then the presidency, I think you're going to hear more about drug pricing. So that makes me a little bit concerned in the next year to be buying drugs when they're near all-time highs.
86.86 was Brent in the 7 a.m. bracket. You have backed off that, and then Dennis mentioned a good level. You had a pair of highs there, right around 87 as well. That's $1.80 away. So that's a ways away. That's another $1.80 away. I don't think you see that pre-market high. If you do, certainly 87 will attract some sellers. I don't know how many standard deviations move this is for Merck here, but if you're buying a gap up here and you're looking for this thing to go to $90, I'd say under 84.50 as things open up on the downside. In order to fill the gap from yesterday, you need to get down to 82.49, but it'll take a lot of buyers off this open to get this back up to 87.
What about Mastercard here? Let's go to MA. These guys just print money. Q2 EPS for Mastercard, $1.89 versus $1.82. Sales 4.1 versus $4.08 billion. So they beat, as is the norm, I feel like, for Mastercard.
Same story with Mastercard for me. This is one I bought back in 2011 at $13. It's $281. I've continued to sell it as it goes up because it continues to just grow. It's just a testament to long-term investing. If you can find the good companies and try not to sell them. If I wish I would have held my entire Mastercard position from way back in the day, but I've probably sold over 2/3 of it as it's gone up. Still have a chunk of it. And it's still one of the biggest positions in my portfolio because it went up so much. But, obviously we do day trading. We talk about swing trading, and we talk about long-term investing. And I mean, this has been a great one for me for a long time. Sticking with it on the long-term account, it's just been an unbelievable. I mean, Visa and Mastercard over the course of the last 7 or 8 years have got to be two of the best stocks on a return basis. I mean, these things have just been unbelievable.
81.44 price discovery. That's your closing price. That's where you're just hanging out now. You got a couple pops up to 83.50. And the reason you did is because your yesterday's high, your all-time high was at 83.33. So those are your levels. Also, that was an all-time closing high at 81.44. So got some love off the report, just kind of holding in here. I think if you're buying this one off the open, you really want it to stay green. Decent support down at 280.08. That's your 2-day low.
What about Grubhub?
Okay. Wait, are they out yet?
You nailed that one yesterday, Dennis. And I think who got participated with you in it? I think it was Jimmy Vegan or Jimmy Beyond Meat.
Yeah, I said I'd fade the pop. It started fading off the hop, but you had to have covered though because it actually did close at the highs. So it opened around 79 and change, got down to the 76 handle quickly. So if you're day trading, that would have been some good money. But then it started to rally, and it rallied into the report at the end of the day. So it's trading down here. Is Grubhub out? It's trading down $2. That's why I assumed it was out.
I haven't seen the report yet.
Maybe it's not out. Maybe they're just profit taking ahead of it.
I'm looking. I haven't seen the report yet.
JV Spec got Grubhub. Good job, buddy, on the short yesterday. Okay, well let's go on to different. There's 160 of them to talk about.
Well,
so
let's go to imbalances real fast, and then we'll grab Nick.
They're small. I looked up just briefly. Square is 48,000 a buy. It's an outlier because we're down significantly here, but they talked it up on Fast Money last night. Carter Worth, who is very influential, it seems like on Fast Money, if you're watching it, he's the one that moves them the most. He came out and said this was a buy, and he also said GE was a buy, which I don't know about that one. But Square, when he said it was a buy, it popped $1 in like the next 10 minutes after he said it was a buy. So it's trading basically flat here right now. It does a 48,000 a buy. So that's a Carter Worth. I still own Square on the long-term account.
What do you say about GE?
Said it was a buy as well, which I think GE is a sell, in my opinion. Wow. I don't like GE at all, but look at all those highs. 1070. I mean, okay, if we take out GE, if we go up and take out the 1075, 1080, then it gets interesting. Over 11 bucks, let's just say on General Electric, then maybe it starts to get interesting. But like I said, I'm not getting bullish GE until Inch gets bullish GE. When Inch comes off the bear train, I'm going to get interested in GE.
All right. Or what about that guy from JP Morgan?
Yeah. And what's his name? Tusa?
Stephen Tusa.
Yeah, him too. Those are the two guns in this. When one of those get bullish, the thing's going to rally. If those guys turn around and get bullish, the thing will rally 10% one day. Those are your two analysts. We talk about, doing an analyst show on who's most influential. Tusa and Inch are the most influential on General Electric. So sometimes it's specific to stocks. Those are the two analysts you want to watch on that stock.
A little bit over a week ago, Inch did come out, and that was the reason.
We're falling here too, by the way.
Okay. What's going on? Core price index in line, 0.2 versus 0.2. I guess personal income, everything's in line here. I guess there's an emergency Fed meeting today. They may have to lower rates today because of so much.
All right.
As market comes in more, they'll be lowering.
All right, let's grab Nick Shaheen, author of Create Income with Option Spreads, joins us every other Tuesday. Also, the author of sellspreads.com. Nick, good morning.
Good morning to you.
What's on your radar here?
I can't believe what I'm hearing. You guys are taking direction from other people. Oh my God.
On what? Who are we taking direction from?
Tusa and whatever that other person.
On Inch and Tusa? You don't listen to Inch and Tusa?
Who's Inch?
Come on. He's the person that knocked GE down. He was the one that called 29 bucks. When
so
GE was 29.
You watch for the chart.
GE was 29 bucks. We'll give you the background. And this is for listeners who don't know who Inch is either. John Inch, who's been on our show, fantastic analyst. He's been on our show a few times. He said GE was the short when it was $29. And he has been lowering his price targets ever since. His price target, I think, is $8 or something now. But he said his bear scenario brings it down to $5. This guy's been dead right on this stock forever. There's just some analysts, Nick, that are really good at their job. And this is one that is really good at his job. So I'm saying when he turns around and gets bullish, I'm buying GE.
So what's also good at this job are the charts. So when somebody's confused about something, I lean onto the charts.
I'm not sure why we're getting the feedback. I think you're getting it with me too. So sorry, Nick. I think this is
no problem.
A problem on our end.
So in GE, it has a hard line that's pretty close to 1076, 1075 right now. And if price goes above it, there's going to be a lot of stops that trigger, and they're going to cover some source. But the bigger line is at 1128, which was a major failure back in February. So, watch these levels, and I would chase the pop from those levels, regardless of what the fundamentals are. You remember when I was here and I said snap 18 to 20, and everybody called me crazy, at least on Twitter they did. Yeah, so I don't believe in the company. I can't stand the platform or the stock itself, but I took it because the technical showed that it could go there. And once the trigger happens, then the technicals do carry weight, especially when there's uncertainty or indecision among investors. GE is so confusing that I wouldn't listen to either of them.
All right, so I want to also talk about Square because you shared us a chart of SQ here. Mm-hmm. Tell us what this chart says.
So technically, I liked it, and I was on vacation until last night. So I'm coming to a down day yesterday. I don't know what happened with Square, but I'm looking for a breakout almost similar to GE. If they can take out, I'm going to eyeball it 82, 80, or let's call it 83. And going into earnings, it makes it a completely binary, which I don't like. If you take out all the news, it could just crawl up above it, and it should target 100-ish. Sooner or later. So I have calls, and now they're red a little bit. I may spread them somehow to lessen the blow if it goes the other way, but it's a binary bet on a good company. So the sector is good. It's been lagging for some reason, so I was betting on a catch-up trade. So I don't disagree with Carter on this one, technically.
Wow. I don't remember the last time you've agreed with anyone on CNN. This might be a first.
No, I've done it before. Only when they don't spew garbage.
Oh, okay. We'll take questions from the chat, but before that, let's get to this chart of the S&P futures here. Tell us what's...
Okay. The S&P, so far, all the moves have been somewhat predictable as far as levels are concerned. So I can't tell you which way they're going to go, but I can usually tell you what the triggers are and where it would go from there. So 3008 has been pivotal for a while. I'm looking back to July, early July, the 3rd maybe. There was a poke there and then fell back down to 2960 something and back again a couple of weeks later. And so it's been pivotal. So I don't anticipate. So I thought it would come into play sooner or later on any dip. And here we are at it. I don't know if it's going to hold. I think the DAX overnight was very down. So we might go down there. And if we do, we'll probably see 2995 or so. But 2988 also was pivotal in my mind from history, from memory, I should say. So I wouldn't be surprised to see that. None of that would change my overall outlook, which is higher. As far as the Fed is concerned, I don't know why they should cut now, but I really don't care. And the market shouldn't either. How much they cut, when they cut, doesn't really matter. The fact that they will cut is what matters. So the Fed net is below us, so the dips will be bought. That's the concept. So whether they cut it now or not, and if they don't, we'll have a little tizzy. If they do only a quarter, we may have a little tizzy. I'm not sure, but the dips will be bought, and I will be buying the dips.
We're getting asked about your opinion on buying calls on Abercrombie and Fitch at $19.
Oof. First of all, I don't like the retail sector. However, I'm looking. I haven't looked at the stock in eons. I don't know where it's trading today or this morning. My chart is not live, but it looks like it has a cup and handle-ish with a huge gap above as a reward. But usually, when there's a big gap like this, it's a fundamental rejection on earnings. So I would have to do the homework on whether the technicals can go there. Like with Snap, it was an easy one, but with this one, it's a little harder. So if they can take out that big red candle from July 22nd, then maybe they have some room to go. But there will be big resistance around 20 because it was like the actual gap opening. But it'll be tough to go there. Buying calls, I'm not a favor. I don't like to. I'd rather sell puts. So if you believe in the stock, if I don't mind owning the shares, I'd rather sell puts or put spreads rather than bet naked calls.
All right. Key distinction. You have to actually not mind owning the shares.
Absolutely. I never sell puts in stocks that I don't want to own.
Right. Even if you wouldn't love owning them, you have to be willing to own them at some point.
And able.
Well, that's true.
Yeah. At the level. Because
I mean,
if I sell a put at 17, for example, I haven't checked the premiums. Let's say it paid me $1. So I have to be willing to own it at 17, and I would suffer losses below 16. If it goes to zero, I lost $16 a share.
this is, such a great point, man. And able. That is the key word here. And I see this again and again. People write puts on something and they think, okay, yeah, I'm going to, write, puts. So I'm going to write, 20 puts on Abercrombie and Fitch. But can you stomach owning 2,000 shares of that? That's
Correct.
what you got to ask yourself. Don't look at the premium that you're getting in and saying, oh, it's only $1 or something like that. No, it's the obligation to buy 2,000 shares. Can you first afford to buy 2,000 shares of that? And I see this like in people doing it on like Tesla. And they do it on bigger stocks, and they just bite off more than they can chew. Like I said, I have some puts written on Tesla way out of the money because I don't think it's going bankrupt. But I can afford to own those shares that I wrote the puts on. I would never write puts on an amount that I couldn't afford to own.
Exactly, because that gets you in trouble. Then they lock up your account. If that happens, they force you to buying puts to cover your bet or something like that, or buy back the puts you sold, and now it's a huge loss, even though it wouldn't have been a loss. So it's selling naked puts. You can avoid the risk by selling a put spread. You cut back on your risk, you cut back on your potential profits, but then you can sleep at night knowing your maximum loss if it goes to zero is X.
Getting some questions from the chat, Nick, about Amazon and Apple.
Okay, Apple, I'm long Apple. I may have shared it. I had a call calendar for October at 2:15, and it expired last week, the one I sold. So my entry cost was $3.30, maybe $3.33, I think it was from memory, and now it's $6.40, $6.50, or let's call it $6 after today's open. I don't like the management. I've said it a million times. I do like the price action. I'm going to share the weekly chart and tell you what I was chasing. I was chasing some sort of an ABC move where, they were headed higher to 250 maybe. Timing, I don't know. So I'm holding naked calls, and today I will decide whether to book it because it's essentially a double, a little more, or spread it again. What does that mean? If I own an October call, it's like owning shares. I can sell a diagonal in it. So kind of like a covered call, but not owning the shares, owning actual calls against it. So I'll put it to work, meaning I paid $3.30 to own the whole structure, and now I'm only left with a naked call. So that was a pretty good bet. Now I can either book it and walk away, or sell a higher call to collect more money and still be long Apple through October.
And Amazon here?
Oh yeah. Amazon, I like it for the long term forever because so far they have done nothing wrong. And every dip is bought. And this is a weekly chart also to illustrate that point itself. So now if I'm trying to time Amazon, I should buy it on red. How red, I don't know. It is market dependent, and it is a Momo stock. So it's going to move a lot faster than the market. Now, on its rally from June 5th up to wherever it was, and now it's falling, if it comes back to 1850, it would still be about, and I'm eyeballing a half back test. So like if you're a Fibonacci person, this would be the 50% retracement of that little rally. Well, it was a big rally, about 20%. So that's normal, in my opinion. So I wouldn't panic out of it. Plus, there were two big candles on the 7th and the day after, and the 10th. So Friday and a Monday that got it to that point. So I think that around there, it would find some support. Now, if the market's completely collapsed, then this one will run faster and downhill too. But I don't anticipate that. So from the spirit of catching dips, this one I wouldn't be shaken out of it right here if I'm still in it.
And one more from the chat. Are you still in Uber?
Yeah, it's one of those I'm not a long-term kind of guy that way, but this one I haven't looked at it, I promise you, in a long time. And if it's anywhere around 40, that means nothing really has changed. I thought I saw a headline that they're getting rid of people, like 400 positions.
Yes, marketing people.
Right. And also they were thinking of selling Uber Eats in India. I'm not sure if I read that correctly, to Amazon maybe even, or somebody.
There is an offer on the table, not from Amazon, from someone else.
Okay. So, but I did read that Amazon was looking to deliver food in India too. So highly coincidental there. That doesn't change my perspective on Uber for the long term. It's a bet. Again, it's a speculative bet on a company that has a lot of challenges now. But I'm thinking that with artificial intelligence coming to streamline their business and entering other businesses like Uber Freight, which nobody's talking about, I want to see where that goes before I decide on it. So it's a small risk, small price to pay to watch a really good company blossom.
And Nick, we can't let you go until you comment on Beyond Meat.
Oh yeah. Again, have not tried Beyond Meat. I still haven't run out of real meat. But it is, I saw that it was down $30 pre-open.
Yeah, it's down 30 more now. It's still leaking here on the pre-market. We're down 35 almost now.
So 185-ish or
187 and a half.
Okay. So I also read that they have a secondary going out.
Yeah.
So that's probably math there, and that people are fleeing, owners are fleeing. I see a point of control somewhere around 170, 171. So, it's at high altitudes, and falling is easy from there. But technically, if I don't know the company and I'm just looking at a chart, I'd say there should be support into that. And then the second level of that fails, then there'll be 145. I'm going to call it plus or minus $3 from there. So it all depends on your if you're asking me if I buy the dip on this one, is no, because I don't know it enough, and it's coming down from a ridiculous level to a less ridiculous level. So I'd leave that candle alone for another day or two.
What about the overall market? We're down 15 points here in the pre-market, so we're getting a little pullback. I guess the China talks aren't going as nicely over there as maybe the market had hoped. I think that's kind of your catalyst here, because we've had a couple tweets from the Trumpster this morning.
Yeah.
But thoughts here, I mean, we got a Fed meeting coming up on Wednesday. So, there's a lot of different things, and we're in the middle of earnings season with 160 stocks reporting here today. So lots of fundamental and economic news coming. Thoughts here as we get to the Fed decision on Wednesday?
I'm going to say something that's probably going to raise eyebrows and call me stupid, but I don't think China matters, the news there. the news has been baked in, the headline news, I should say. I even if Trump says I'm not negotiating anymore, let's just walk away and do business however we want to do business, I think we'll be just fine. Markets will find a way. There's too much at stake. The businesses will find a way to get around it. It may cost a few extra pennies here and there and a few things here and there, but eventually it's 540 billion and 225 billion. So it's not the end of the world either way you slice it. So the China doesn't worry me. The new effect is the rate cut or not, that will have a bigger, I think, psychological effect short term. Regardless of what brings us down, I think 3008 is pivotal. Below that, I'd start looking at 2988. I'm not calling for it, but that would be the next area I would look at. I put like 3 yellow lines on my charts just to visually guide people to where I think we could fall and just find some footing, fall and find some footing. So the question is, where do I catch the falling knife? And it all depends on time frames. So if I'm in the long-term business, I wouldn't even look at the charts because I'm in a long-term business. But if I'm trading short-term, like if I have a few credit put spreads for this week, yeah, I'd look and see if it pierces the levels that I expected. So in this case, I already charted a dip down to 3008-ish, and then a small bump, and then another dip lower to 3000 or lower. 2998 for some reason pops onto my screen. So as long as these levels are in play, I'm not worried.
All right, Nick Shaheen is the author of Create Income with Option Spreads. Joins us every other Tuesday. Nick, as always, thanks for the time. Talk in a couple weeks.
Looking forward to it. Thank you so much.
We're just slow melt away here. 0450 pre-market low, currently trading at 3005. That's down 16 3/4 handles. We're taking out Friday's low. Now the area that Nick was talking about in my reference area here is going to be, I guess it's only 2 lows, even though he had an intraday low there. But Nick mentioned Thursday's low at 29.98. Well, Wednesday's low was right below that at 29.96. That's another 7-8 handles away. I don't think we're going to get there without some 8-9 point rally. I just don't think we're going to go straight down to that area, but anything can happen. 852, Dennis, Procter Gamble not giving in yet, still up 533 at 1.
Yeah, I'd already traded 424,000 shares now. There's still 40 minutes to go. So I just go look at the book again and see if it's grown at all. Yeah, it's grew a little bit. Those offers are a little bit bigger. 300,000 now at 120. 4, 5.
I want to do a stock for
5. I think it's still gonna have trouble opening over 120.
We have someone in the YouTube chat. They've asked about Revolve several times, and I don't
What's
want
the symbol on that one? It's newer, right?
RVL.
RVLV.
Yeah. And all I can say is this thing's winding up here. I see a trading range from 33.40 up to like 35.60.
Wild.
Yeah, 33.5 to 35.5. Trying to hold that support there. So I'd wait. It's trading up 65 cents here at 35.76. I don't know. Do they have earnings or news or something on it? I'd say if this can hold the top of that range, 35.5, you got a chance here maybe to get up and test 40. I don't know if it's trading up on much volume, but
no, it's not trading up at all.
Oh, it's not trading up
That's
at all.
not a lot. Yeah. So it's, I don't think there's news. I don't think there's anything on this. It's probably going to open down because the market's opening down. So now you got to analyze 32.51, the low from 3-4 days ago.
Yep.
Is that, this thing is wild. It has, this is probably why I don't trade it, because it's got it seems like a 5-7% range every day. Way, hard to trade these things like this. I know everybody gets attracted to these new companies because you make money fast. I will tell you lose money fast as well. I'm no good at trading these stocks when they're only out there for, what have we been out there for, 2 months? I mean, there's just not enough information. It's too volatile. Will I play around sometimes with speculative capital and stuff like this, but definitely not my bread and butter trading stocks like this.
All right. Want to go back to the earnings barrage?
I actually want to talk about Overstock quickly here.
Sure.
I don't know if I've seen this before. Overstock declared a dividend today. 1 digital share for every 10 shares held.
What?
One
digital share. What? I don't know.
Digital share. Okay, I'm reading.
What's a digital share? What is that?
I'm reading from the press release. Announces that its board of
Like a cryptocurrency thing.
Yeah, they're the
Yeah,
ones that were going to
yes.
replace the New York Stock Exchange with trading, with crypto trading, right? Somehow.
So you're getting one digital share of what?
I'm going to read from their PR here. They has declared a dividend payable in shares of its digital voting Series A1 preferred stock. The record date is September 23rd. The dividend will be payable at a ratio of 1-10, meaning that one share of Series A1 will be issued for every 10 shares of common stock, Series A1 or voting
So they're
Series.
spinning something off. They're giving you something.
They're basically creating a new class of shares. I guess they're calling it digital shares, and they're paying a dividend on
Stocks popping up on this. I'm not following the story enough to analyze it at all. I can just tell you this has been running. This started running back when you had those two huge CEO purchases when the stock was under $10. There's two big exec purchases, two real big ones. And I know because I can remember that back in June, the stock was under 10, and they've been running ever since. So it wanted a vote of confidence. It got that vote of confidence from the two big exec purchases, and it's been running ever since. And maybe there's been some other stuff going on here. Like obviously it was a month and a half ago, but that was the bottom. And it popped that next day off those exec purchases. I think it was up like almost 10%. So, and since then, it's just been a rocket ship here, coming back a long ways. I mean, are we going back to 40, 50, $80 again? I think those levels are long gone. I think if I was in this thing, I would think about ringing the register sometime really soon because it's really gone parabolic here now. And it's still a stock that isn't an overall downtrend. It's not like this little darling here. The overall trend is still not your friend. But the last month has been incredible for the stock.
And crypto, it kind of had a little help from the Bitcoin rally too.
Short interest is high, which is
on its own.
sad. So you get a short squeeze going. But
23.75 is your pre-market high, so you want to follow through that level on the monthlies. Not much there, but just make sure you take out that pre-market high and continue. It looks like someone had a good feeling about this one yesterday, as it gained over $2 on like double Friday's volume. So, the news was out yesterday for some people to see if it gets sold into today.
I just want to repeat something that Ian Weiner said on our show yesterday, and it was, I never, really thought about that way, but it's such a good tell. When you have a huge short interest in a stock, it's the kind of stock you do not want to put in your long-term portfolio because he said eventually those people are usually right. Now, short term, you can have short squeezes as traders. We kind of like going long sometimes those things right now because they give you a short squeeze. But when you're sticking in stocks like Beyond Meat and Overstock into your long-term portfolio, your retirement accounts, and we look at this in 20 years and I think it's going to be higher, if they've got those huge short interests, you're usually wrong. So these are two stocks, Overstock, Beyond Meat, that I absolutely would not put in my long-term portfolio. Not only because of the stories, but because they have those high short interests. And I think Ian's right. I think those people are eventually right. It's a matter whether they're allowed to hold long enough to actually reap the benefits of it.
All right. S&P's down 17 clean handles here at 3,004.75. Not much of a bounce yet here. We've got about a minute and a half. You want to, I didn't see any major ratings that we should touch on. I guess the good call yesterday, Dennis, on Pfizer. It did have a wild
ride. It was wild, though.
Got back up to 43, but you had to be quicker than a cat to get that. Got
that opening bar. Like, who bought that up to 43? Man, that was a good opportunity to get the hell out. And it's now 40.5, so around 2.5 points lower than that right now. Again, we see this big rally in Merck here this morning. And it's already starting to leak. And I'm talking as my book here a little bit because I own Merck and Pfizer in the long-term portfolio. But like I said, I'm just concerned long-term, not long-term, but in the next year that there's going to be more issues with, politicians talking about drug pricing. And that could continue to put pressure on a lot of the drug stocks. So when you're seeing these stocks trade up near all-time highs, even the Abbott Labs, I don't know if they're going to be up here a year from now. I think there could be more pressure on them here. So I wouldn't be adding to drug stocks up here. If you don't have any, it's one thing to be diversified, but I don't like buying them up here. I think there's going to be pullbacks to get a better opportunity again in some of these drug stocks.
There's a few ugly charts out there. Have you looked at Boeing since its earnings report?
Boeing's been straight down. It can't catch a bid. And there's so many issues here. Obviously, we know the max is still the issue, the main issue. But there's, you know, when there's headline risk and there's stuff obviously going on that still is not figured out, this is what can happen. And the stock is back down the lows. That being said, we've come down significantly. This is where we found support at 330 before. So maybe we get down there. Maybe it bounces here the first time. I mean, it's a you know, you're looking at the charts. You know, back in June we bounced down in this level a couple of times. So we get down near 330. I think there could be a bounce in here, but it's been a rough ride for Boeing.
All right, it's 9 o'clock. I want to take a quick break and grab our final guest of the day, Guy Gentile. He's an investor, he's a trader, he's an entrepreneur. So Dennis and Joel might hang around, but I'm going to be right back in a moment here, and I'm going to grab Guy Gentile. All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, and Dennis Dick, now joined by Guy Gentile, who, as I mentioned, trader, investor, entrepreneur, founder of Short Trader and Speed Trader. Guy, how's it going today?
Great. How are you?
Good. Let's talk about Beyond Meat. You tweeted yesterday that you are up, what, like 4.2 million year to date on Beyond Meat. So let's talk about what exactly did you do yesterday?
So yesterday's play, I saw it as mostly a sideways day coming from Friday. Because earnings is coming, people don't really know what it's going to do. So you just have options kind of positioning themselves for what could potentially happen. So you have people hedging their positions. You had CNBC telling people to buy it, that they should buy some shares. So it's like just retail getting pumped into this stock. And what I did yesterday basically was just, I sold the 230 calls all the way up to the 270 calls. So I'd have an average price of maybe 255, 260, just in case it spiked on earnings. Now, my belief, my analysis was that no matter what the earnings were, whether they beat everywhere, no matter what, it was going down to 165 to 185 today on Tuesday. And if you look at my tweet from Saturday, that's exactly what I said. No matter what it does, I don't care if it does jumping jacks, it's going to 165 to 185.
Why?
Because it's kind of like Bitcoin in 2000. Once you've sucked in all the retail, there's no one left to buy after that. There's no institution stepping in here at a $14 billion market cap to buy the stock. You know, they might step in at $60, but they're not coming in at, you know, $240 with this massive market cap. It's ridiculous. The only reason why it's here is because of the overnight interest fees and the small float and cheap options, you know, have caused it to just, and also shorts being tracked. And the shorts got trapped by initially shorting stock. You know, they went a little too heavy in the beginning, and then they start selling calls. And what gets it to this level is when people sell calls naked, as soon as it loses time value, which it was doing very quickly. Like if you were short the $200 calls coming into Thursday, the market makers on the other side, they were already assigning you before Friday, forcing you to be short and then blowing you out on the squeeze. So that's kind of how you know it's getting very, very close to the end of the move, which is, you know, why on Friday I banked 1.7 million in the first 20 minutes. Because my read into Friday was that the $200 calls were going to get assigned coming into Friday morning.
Oh, wait, okay. So wait, what options are you finding that are cheap? Because everywhere I'm seeing they're crazy expensive.
I'm talking about last week's options.
Okay.
Last week's options expired Friday, so they were relatively cheap coming into Friday. So Friday, right out of the gate, I went massively long puts right at the opening bell. So I bought probably 2,000 or 3,000 contracts of the 230s and the 225s and the 220s. It dropped down to 215. That was kind of where there was a lot of puts at that level, so I knew it would bounce there. So I immediately covered and just banked right away. But my analysis coming into that day is that Thursday, it squeezed up from, I think it was like 210 to 215, and then finally, it closed at 220, 222, and then after hours, it trickles up to 235, and then pre-market Friday trickles up to 246. So what that means to me is that the clearing firms are blowing someone out. That's a capitulation move when you have pre-market or after hours and then followed up by pre-market it going up. Clearing firms, this is from my experience from running brokerage firms for 20 years. Clearing firms do not wait till the market opens anymore to blow people out. They do it pre-market. They just take you out of your position. But once they've taken you out of your short, there's no more buying demand. It's over. So I knew that as soon as the market opened that I had to short as many as I could. And I laid out almost a couple of $1 million. And I didn't just sell, buy puts. I also sold calls as well that are expiring this week, the 220s. And then I hedged with last week just to have the hedge on. It did bounce back up, but the reason it bounced Friday is, again, because of the super cheap options and retail just coming into the stock for earnings. If it wasn't an earnings day yesterday, it would have tanked Friday. It would have been over. Like, that was a capitulation move. It never seen a higher print than 246. That was the high.
So you have any trades on right now?
Yeah, right now I still have the 230s to the 270 calls that when they open are probably going to be trading at 5 cents. I sold them for 400,000 worth of premium. But yesterday I came into the day short 15,000 shares of equity from Friday assignment, and also still short the 220s. I had 500 contracts of the 220s. That we covered when it dropped to 201 yesterday. We covered into that move, locked in almost about 350 on that, and then now we have another 400 that should get locked in today.
So you are exclusively trading this via options, not via the stock.
Well, we did have some equity that we were assigned. So sometimes we'll get assigned equity, and then we'll come out of it. To me, this is a derivatives game. The way I'm able to read this stock is by looking at the derivatives, and where I'm able to see where potential support and resistance is by looking at the open interest of the calls and the puts, and also looking at how much volume is traded there. And I'm also looking at how close are we to expiration, because that's going to determine, like, if you look at the history of the stock, as we get closer to the expiration week, like Thursday, Friday, if the stock is heading up, it usually spikes up those last 2 days. If it's heading down, it spikes down those last 2 days because of cheap puts and cheap calls. The momentum it's easier to push it down one way or the other. So I'm also monitoring the overnight borrow rates in real time. I'm checking to see is the rate going up, is the rate going down, is there shares available. That's helping me with my analysis as well.
There aren't, right? It's extremely hard to borrow.
There was 50,000 shares available at IB on Friday's close, which to me tells me there's none now, but it just tells me that that people were blown out of their position. It just confirms what I thought the night before.
Okay, so how are you approaching today then?
So what my read on the stock right now is that they had an offering last night.
Yeah.
Right. 30% of new shares. Stock's only down 16%. You would think it's going to go down at least 30 because there's 30% more shares. But I think it's going to overshoot to the downside. I think we're going to see 150 by the end of the week. I don't have any shares to short. I got to wait till the market opens. But I'm going to basically do the same thing. I'm going to sell a call spread this time for next week. It's probably the 200s and hedge with the 210s, and then take that premium and buy puts with it that expire this week as well.
Do you have a medium term or a long term thesis, or you don't even care at this point? You're just trading trading the short term?
I'm trading in the short term, but long term, I think the stock goes under 100 by December. And I came out with that probably a month ago. A month ago, I was also short massively at the actual Benzinga conference. I had like 4,400 puts of the 160s, and it dropped to 135. I didn't catch the whole move, but I made about $2 million on that as well. To me, this stock, it has moves in one direction, right? So right now the direction is down. There's no reason for it to pivot at any time soon. Probably, it's going to have some strong support between 120 and 135. But until then, I just see it going down. There's an offering. All the news is out. All their deals are out. The news mill should be slowing down. Insiders just sold shares. That's a signal. Who's going to be buying right now? All I see is potential sellers. I see retail that has shares selling. I see anyone who bought calls into this earnings is going to be dumping their calls that are almost worthless at this point. And I see put buyers coming in. And I see shorts backing away from the market to let it come in so that they can finally make some of their money back. So why not, take a ride on that?
Guy, before I let you go, I want to ask you about when that LCI, I believe, are you still long?
I am.
And talk us through, quick, what is your thesis there?
An LCI, I believe that at least right now, seeing what happened with Mylan and Pfizer, I kind of predicted that there was going to be a consolidation after the state's AG started suing all of these generic drug makers. And now we're starting to see the first signs of that. I think LCI is a great candidate for a merger or being taken out. Every analysis that I have on it says the company's worth at least $600 million, which puts it at around $15 a share compared to its $650 or whatever it is right now. I'm not even watching it every day. It's a long-term play. I've been holding it for about 10 months. I'm up about $7 million on it. I've been up as much as $15 million on it. I like it. Great management, and I don't know. Drug dealers make money, so it should be all right.
And then, are you watching Apple today? Are you playing that at all ahead of earnings?
I'm not playing Apple. I'll wait and see after what happens with earnings, and then maybe take. I like to wait for the moves to overshoot first, before I take a position. And with Apple, it's not overshooting, it's not undershooting, it's basically just kind of steady right now. So I just don't see an opportunity to make easy money on it.
All right, Guy Gentile, as I mentioned, he's a investor, he's a trader, he's the founder of Shirt Trader and Speed Trader. Guy, thanks so much for joining us today, and congrats on those trades.
Thank you. Have a great day. Right. Bye-bye, guys.
All right, 9:13 now. That'll be it for today's show. I want to thank Guy Gentile. I want to thank Nick Shaheen. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. Please remember that all of the information and content from our show is meant to be used as informational purposes only, not for investing or trading advice. If you missed any part of our show, catch a podcast or available on iTunes, SoundCloud, Stitcher, TuneIn, Google Podcasts, Spotify, and of course on YouTube. That'll be it for our show. Everyone have a good rest of your day. We will see you on Wednesday.